Like, so if my car note's $500, I'm going to be putting 500 in my portfolio every month, and I'm not going to sell that stock, right? And that's the other thing too. You got to commit to not selling what you buy, because if you just sell it right away, then it's not going to get a chance to grow. It's like planting a seed and then digging the seed up and then replanting it and then digging it up and replanting it and digging it up. So I don't think car notes are necessarily terrible. I just think that you want to be careful. Another thing that I do with my cars is anytime I get any extra money, I pay my cars off very quickly, because I don't want to keep paying that interest. So a lot of times paying down a high interest car note or a high interest credit card is better than investing. Why? Well, because if I invest in the stock market, I might make 5%, I might make 10%, I might make negative 20%, right? I don't know what the market's going to do. But if I pay off a 12% credit card, I'm guaranteed to be making 12%. But because not paying 12% is the same as earning 12%. So if I have a choice, like, so if you're sitting on a bunch of credit card debt and you're like, oh, should I invest or should I pay down my credit card debt? I think paying down the credit card debt should be top priority, because that is guaranteed income. That's a guaranteed win for you. That's a guaranteed 12%, 8%, 13%, whatever your interest rate is. What I would not do though, what you always have to keep in mind though, is you got to protect the home base first. So you want to stay liquid. You want to make sure that that you don't put so much money into paying off debt that you end up not having the cash you need in order to do the things that you have to do. The next best thing to building like a positive net worth and profitability and wealth and all that, the next best thing, next most important thing is having access to capital, access to cash. If I'm in a real tough financial spot, let's say I'm having a real bad year and my money's just messed up and I've got repairs to make and my business is struggling and all this other stuff. Let's imagine if I knew if I could go to the bank and borrow $1 million to get me through a rough patch. I'm pretty comfortable in that spot, right? I can survive. I can just keep holding on for a better day. A lot of investing comes down to your ability to just simply wait out the storm. You know, if it starts raining, and if I can just go into your house for a couple of hours till it stops raining, then I won't get wet, right? But I'm in big trouble if I don't have anywhere to go and I don't even have an umbrella. And so a lot of times, in times like this, like right now with the economy being where it is, a lot of companies, they're thinking about profitability for sure, but they're really thinking about survival first. So if you have a company that has cash flow that maybe isn't even making a profit, but they've got access to capital from banks like Uber. I don't even know if Uber's made a profit yet. Let me see if Uber's even made a profit. I don't even know if Uber's made a profit. Think about this. It's a massive company, hasn't made a profit yet. Or at least I don't think so. Has Uber made a profit? Let me see. Oh, they did finally make a profit. Okay. So they said Uber did finally make a profit. The company reported $595 million in quarterly profit, but that's entirely due to Uber's investments in other businesses. So Uber made a profit, but Uber did not make a profit from being Uber. So there's nothing about ride hailing that made them a profit. What made them a profit was diversification by investing in other companies. So it's kind of crazy. So if you're not even making a profit, what does that mean? That means that you're spending more than you're making. I mean, think about it. How many of you think, how long would any of you be able to make it financially if you every month, let's say your income every month was 5,000 and you were spending 12,000 a month? How long could you survive? Most people can't survive that long, right? How many months do you think you would go if you were making 5,000 a month? I don't know how much everybody makes. Well, let's say you make 5,000 a month, but you were spending 12,000 a month. How many months would it take before you were kind of homeless and struggling? How many, wait, 3 months, 2 months, 6 months, a year? If you can make it a year, then you're doing really good compared to most people. Most people couldn't make it more than maybe 2 weeks, maybe a month. Okay. Uber is a company that can lose billions of dollars a year and still keep operating. And remember, just because you ain't paying the bills doesn't mean somebody ain't paying the bills. You know, it's just like when you have, maybe a guy that makes babies and doesn't take care of them. Well, that means that burden is falling on somebody else. So just because you ain't taking care of your kids doesn't mean your children aren't being taken care of. Somebody's picking up the slack. Either the mother is, or your mama is, or or a new baby daddy has stepped in, right? So somebody has to pick up that slack. So if the company isn't making enough money to pay all of its bills, who's paying the bills? Well, the banks and shareholders. They go and they have access to capital markets that basically allow them to, and think about this too. Why would they pay your bills in the first place? What would make them say, yeah, I'm going to keep paying your bills. You keep overspending. I'm going to keep covering you no matter what. Well, they do that because they see it as temporary. If they thought that Uber was going to permanently lose money forever, then nobody would fund them, right? And that's when a lot of companies lose their funding during a down economy. That's when they die, is because people just stop having faith in them, like the crypto companies, like FTX and all that. If FTX had enough confidence from investors to go raise the money they needed to survive as an ongoing entity, they could have made it through the crypto storm. They could have said, it's a crypto winter, but it'll be better in a year. We'll just, it's raining outside. We're just going to go inside and stay dry until the rain stops. Then the sun will come out and everything will be fine. But they didn't have the luxury of time. So time and money are deeply linked. Just like they have a space-time continuum, there is a time-money continuum that is deeply connected. Money buys you time. So imagine, go back to yourself. Imagine if you make $5,000 a month and you're spending $12,000 a month. Your bills are $12,000, but you're making $5,000. And imagine if you had a friend or a bank who says, you know what, it's okay. I'm going to bankroll you. I will take care of you. You can come and borrow $200,000 from me at any time that you need it so that you can survive the next 3 years. I want you to go to school. I want you to focus on your future. And then we'll just make it right later on down the road. Well, that's pretty powerful, right? That's access to capital. And this is what Black businesses need the most. When people ask me, whenever an expert or a politician comes up and wants to know my opinion on what Black people need in terms of wealth, I tell them they need access to capital, because there are a lot of Black businesses that might need to have 2 or 3 years where they're going to lose money so they can build market share and develop their products and get everything ready, or really develop their business model. But unfortunately, you operate on a very short leash. So one of the things that I sort of talked about in the new book that I wrote, The 10 Commandments of Black Economic Power, is that the business models for Black people and Black families have to be a little bit different than they are from other families. You hear stories all the time of people that say, oh yeah, I started my business because I went and borrowed $300,000 from my uncle. Most of the people I knew growing up couldn't do that kind of thing. But your kids are going to be different. Your kids are going to be able to say that. Your kids are going to be able to say, you know what? Way back in 2023, my mother or my father, my parents started doing the $5 a day investing plan, when they invested $10 a day for me since I was a kid. Now I have $500,000 in liquid assets, and I can go tap into that. That is my bank. I can become my own bank. And this is really important, because a lot of the ability to be free, the ability to escape the corporate plantation, the ability to really maximize your life comes down to the ability to get what you need to be able to fund your lifestyle. So when my 12-year-old tells me she wants to go become a dancer in Paris, I said, yeah, absolutely. That sounds great. You should do that. You should do that for a couple of years. You should do that while you're young. Why can I say that? It's not just because I'm her rich father. It's because she's going to have an endowment, which is like having a bank strapped to her back, so that when she needs money, she just reaches into the backpack and pulls out the money that she needs. But you got to plan for that, right? So time and money are deeply connected. The more time you invest, the more money that you'll have. All right. So let me answer a couple more questions, and then we'll get on out of here. What's the name of the headphones, Dwayne? These are called Shocks. That's what I'm talking to you. These headphones allow me to hear and talk. And apparently the audio is good, so I'm going to keep on using these because it's very easy to use. Dennis says, I'd like your opinion on NVO. Okay, the company is a drug for child diabetes. Pharmaceutical companies, yeah, they have a lot of what is called jump risk. So pharmaceutical companies can really jump at any moment. Let me see here. NVO stock, it looks like the company's done really well in the last year, up 42% in the last year. Yikes. Let's see here. You know what? I mean, it looks as good as any other company. I wouldn't blame you for investing in it. I wouldn't put all my faith and hope in one stock, though. Remember, you're investing in a company, not a lottery ticket. So the ticker symbol is NVO, NV, Nancy Victor Oscar. Let's see. Rarick says, what is the VIX? Can it help me understand how the stock market is going to move? Yeah, the VIX is what they call the fear index, and it measures how nervous investors are which impacts the volatility of stocks. So when people are scared, stocks go all over the place. So think of it like that concert last week with that rapper Glorilla, where somebody freaked out and panicked. Next thing you know, everybody's getting trampled. Well, that's kind of what the VIX is. Like everybody gets scared and goes crazy. They act like a pack of wild horses and crazy things happen. So investors do that too. They call that the herding effect, where investors behave like a herd of wild animals and they freak out because they're afraid. And what that does is that shows itself with stock market chaos and volatility, stock major declines, market going ballistic. So they have things in place that are literally based on therapy and psychology. Actually, this is why I'm very proud of the fact that the Black Business School has the first ever Black financial therapy department, because I want to teach you guys how to psychologically process things so that you become a good investor, so you don't overreact to things, so you don't do what bad investors are doing. And so one of the things they have in the market installed is what they call a trip switch. The trip switch, basically, if a stock moves more than 10% up or down, they shut it off. They stop the trading. They say, oh, calm down, time out. Go chill out, go to your corner, sit down, process the information. Then you can come back and trade, because right now you're reacting too much on emotion. This is actually a tactic that therapists use in marriages. Therapists literally use this. Therapists will tell you that if you get into an argument with your spouse or your buddy or your partner and y'all going back and forth, thank you, Anthony, circuit breakers, that's the formal term. You're right. So if you get into an argument with your spouse, your buddy, or your partner, and you're getting too heated and you might say something you're going to regret, the best thing to do is to say, you know what? I don't want to say anything I'm going to regret. I got to go. We'll talk about it later, but I don't want to talk right now. And you get a chance to calm down, and then you have a more rational conversation. So the VIX kind of measures that. So yeah, you pay attention to the VIX and where it is and where it's predicted to go, and that does impact stock prices. And when the market goes down or up a lot, it tends to overreact. So a lot of times you find these little reversals where big dips are followed by a rally, and a rally is followed by a dip. It's kind of predictable in that way. Rarick says, what is bond duration? Bond duration is basically how long in the future the money is. Every asset in the universe is valued with the same model. And it's basically what they call present value of annuity model. And it's basically where you look at all the money that this thing is going to make, and you use a financial time machine, which is basically a math equation that translates future money into present money. So it takes into account inflation and risk and some other factors. And basically, that's how you get the price. So there are different kinds of assets. So think of it like different basketball players. Let's say you got one player who's ready for the NBA right now, and he's ready to go out and make, $5 million a year, $10 million a year, because he's ready to play right now. But let's say you have another player who's 12 years old. So he's going to be 10 times better, but it's going to be a few years before he actually gets to the league. So you don't know what's going to happen between now and then. Also, there's a lot of time you have to wait. So there are ways to value both of those athletes as assets, or both those athletes' talent as assets. And the long duration asset is the 12-year-old, because his money's way off in the future, whereas the short duration asset is the player that's already playing and making money. They can make money tomorrow. Let's see. Will you be reading your book in the book club? Probably. Right now, we're still going through Dr. Claude Anderson's books, and actually, we've only covered Black Labor, White Wealth, and Powernomics, and I want to go through his other 3 books too. So, just out of respect for him, because he's the originator of all this, so I gotta respect him before I get into my stuff. But every now and then, I will pop in and read a little bit of my book. And if you want to go take a look, it's called The 10 Commandments of Black Economic Power. I keep repeating the title. For those of you that have heard me say this a million times, this is how you have to market things. This is how you let people know what's going on. You have to repeat it. Because not everybody hears it the first 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times you say it. So, and because we don't have major corporations kind of backing us and doing our marketing, we just market ourselves. So this is the strategy. So if you have a product or book or anything out there that you want people to see, you got to tell them about it regularly, all the time, often. And so that's just a little tip for those of you that have your businesses and you're doing your thing. All right. Tiandra says, can you start doing a raffle maybe once a month for an opportunity to get your books? That's a great idea, Tiandra. Chanel, write that down. Let's see if we can incorporate that. Let's talk about that in a meeting for sure. Dwayne, where do you go to see how to set up a trust? I went to a lawyer. There are estate planning attorneys that can really be helpful with that kind of thing. Alice says, what about Weight Watchers and their partnership with telehealth? The stock went up $1.60 today. I invested in Weight Watchers years ago. I think that they're a good company. I think Oprah's involved. And I can see Weight Watchers being something to add to the portfolio. I wouldn't say it's the stock that's going to save your soul or make you $1 trillion, but I did make some money when I invested in Weight Watchers. I don't see anything wrong with that. Is it too late to purchase Occidental Petroleum? Do you have Moderna stock? No, I don't have either one of those stocks. And what are your thoughts on the morals of being rich? Um, you know what? I mean, I think that morals, oh, your morals would not allow you to buy Moderna. Okay. Yeah, I bought Moderna because I didn't think much about it, to be honest with you. Um, but I guess the morals maybe have to do with them promoting the jabs and all that stuff. And y'all have different opinions about it. I don't think all of us have to have the same opinion about the jabs, right? So I want to make that clear. Um, yeah, I think that, when you talk about activist investing, there are people that do that. There are people who only invest in certain kinds of companies that do certain kinds of things in a certain kind of way, and that's okay. But then there's some people who just say, I'm going to invest in the companies that I think will make the most money or reflect my interest as an investor the most. I think it's up to you to make that personal decision. I can't tell you how to do that. Um, I do think that, when you talk about the morals of being rich, I think that having money really makes you a bigger version of who you are, and I would encourage you to think through um, what matters to you, and just realize that having wealth allows you to execute your vision more effectively. The only area where I might draw the line, I saw somebody mention private prisons. Yeah, I wouldn't want to invest in private prisons, and maybe there's some other stuff if I thought about it, but I just honestly, I just look based on what kind of portfolio I want to have. Let's see. Rain says, "Good morning, Dr. Boyce. Can you explain how stock prices change after hours and the market is supposed to be closed?" Yeah, there's a smaller aftermarket that does happen. Not for all stocks, and the liquidity is much lower, so sometimes it's harder to trade. But yeah, it's available. Robinhood has it. E-Trade has it. A lot of stocks you can actually trade after and before the market opens. Gwen, good morning. Powell will be speaking to Congress today on the expectations that interest rates will rise. What can you tell us about strategies? Yeah, I think that as inflation starts to pull back and they start to be more optimistic about it, that's when I just think I know for a fact, not for a fact, I strongly believe in the next year and a half, you're going to see a lot of these stocks that have a price of $100 now that are going to be $180, $170. A lot of my strategy as an investor has been things like buying long-term call spreads on companies like Amazon and what's another one, Chipotle, stuff like that, where I believe that over the next year and a half, as the economy recovers, these stocks are going to do well. So, and when I say call spreads, if you don't understand, these are options. Stock options are great to use as a way to invest in assets without having to put up all the money, but you got to do it in a careful way so you don't take too much risk. If you want to dig into options, you can actually, if you go to stockoptionsmasterclass.com, there's a whole options training curriculum that I put together at stockoptionsmasterclass.com. And some of you are in the Prime program where we talk about generating income from options. And at some point in the next 4 weeks, I'm going to do a stock options training camp, a 2-day event. So if you guys want to participate in that, you can feel free to do that. I'll let you know. All right, let's see. What is Amazon? What about Amazon? Is it a good stock? Yeah, Amazon's the biggest holding in my portfolio. I love Amazon. Hasn't done so well in the last few months, though, but I believe long-term it'll do great. Hey, Dr. Boyce, says Emily, what is the difference between stock and a dividend stock? A dividend stock is basically a stock that pays you dividends. Dividends are a way to provide extra income even when the stock price doesn't go up. Check out Dane Calloway. Y'all so curious. And what you and Chanel think of him. I'm addicted to your channel and his. Yeah, Dane Calloway's smart. I like Dane a lot. I don't watch a lot of videos on things other than stuff that I'm learning to do things to be better at what I do for you. So I tend to only watch videos about either finance and investing or what other videos. I watch videos about how to fly an airplane because I've been training to become an airplane pilot. So I've been watching videos about that. And I also like NASCAR races in South Park. That's really actually it. I can't think of anything else that I look for on YouTube because some of the content is just stupid and a waste of time. And it's built for immature people and people that want to waste time. I don't like to waste my time. I watch things that are going to help me and my family have a better life. I'm not judging anyone else, but that's what I do. I don't even watch videos about me. I don't care what people think about. I don't care what people say about me. But I figure they're going to say things to get views, and I applaud. They go for it. It's up to you. But I literally have never watched a video about me, and there've been probably 500 videos made about me to this point. I've never watched any of them. It just, what's the benefit? All it's going to do is get on your nerves and whatever. So, so keeping your mind space in a positive place, I think is very important, especially for those of you that are trying to become entrepreneurs and successful, or whatever you're trying to do. Focus, put on your blinders and focus. There's so much nonsense out in the world that's going to try to distract you. And get your meditation on, whatever you got to do. And in fact, that'll be the last piece I'm gonna throw in here. I'm gonna answer a couple more questions, then we'll have to bounce out. But Kevin says, would you buy Nvidia at this price point? Yes. I like Nvidia a lot. I've been buying Nvidia. Nvidia's been killing it in my portfolio. Please provide insights on Silvergate Capital, Marquez. Yes, we talked about that a lot in Prime. As you saw, Silvergate just got body slammed because of their overexposure to the crypto space. What happened with Silvergate is interesting because Silvergate was what is called a crypto-friendly bank, and politicians are now using Silvergate Capital's market decline and their financial problems as a case in point to show that the crypto winter has infiltrated the general banking system, which is to some extent true. Now, in terms of what we talked about in the options class, I own Silvergate for one reason. The stock options premiums were really high. I was generating a lot of income off Silvergate. I'm still generating a lot of income off Silvergate Capital. Obviously, when a stock drops like that, it kicks the butt of your equity value, right? Which really sucks. So this is why, if you guys are in the Prime program, this is why one of the rules, I literally am putting together like almost like a gospel, like a list of rules that I follow when it comes to selling stock options and generating income. Is one of the rules is you got to fortify your portfolio. So if Silvergate is at 14 or whatever it was last week, it would cost almost nothing to buy some put options with a strike of say 9, right? And so when that stock plummets, sure, your equity value drops, but then your put options kick in, and that's what saves you. My parents called me the other day, and they told me that I worry about my parents because they're older, we have health challenges, all that, and I call them every day just to check on them. Well, we had a power outage in my hometown of Louisville, Kentucky, and the power outage was 3 days. For 3 days, nobody had power, and it was cold in that city. My father, because he is a proactive thinker, he was a former cop, so cops think in terms of security. They're always thinking about what if, how do I protect against all the what ifs? He bought a generator years ago that cost him a lot of money, and he hooked the generator up to every single appliance in the house. They said, oh, well, you can just hook it up to the refrigerator and the stove. He said, no, I want it hooked up to everything. I want the whole house to run as if nothing happened. Well, when the power outage took place, the generator kicked in, and my parents were able to go on with life as usual with full power, right? So where am I getting with this? Well, maybe one of the reasons that I think the way I do is because of my father. I love him very much. I respect him. Not my biological father, I never knew him, but my father that raised me was a great man. And one of the things that he gave me that helps as an investor that I want to give to you is that he's always focused on the same thing that I studied this extensively on a theoretical level in grad school, which is risk management. Risk management. Risk management. Why is that important? Well, because I see a lot of people online that talk about investing in a way that is unhealthy financially. Like, for example, if you've got 4 stocks and 3 of them are doing okay and one of them is killing it, there are people that will literally take all the money from the other 3 and pour it into the 4th stock because they're not thinking about, well, what happens if this stock just collapses and I lose everything? They're not thinking about that. And then when they lose everything, they think in a very reactive fashion. They're like, oh, this is terrible. Oh my God, it's so hard to be black. This ain't right. This ain't fair. But if you're proactive, you think like my dad does, where you're managing risk and you say, okay, well, what if this stock goes down? Like I see it going up, but what if it goes down? What does that look like? So you stay ready. Thank you, Miss Hitchcock. You stay ready so you don't have to get ready. So with Silvergate Capital, believe me, there's another Silvergate that's coming along. And a lot of you, when I sent out the Dr. Boyce Moneymakers in the Prime program and all that stuff, you all know I liked Silvergate, but we also talked about how risky it was in class. And so Silvergate collapsed. Yes, it did. It's going to keep it may collapse again. But there's going to be another stock just like a Silvergate that's going to collapse too. The same time Silvergate collapsed, Reata Pharmaceuticals doubled or tripled in price. So a lot of you made money on Reata. So here's the rule. Here's the general rule. Here's the rule I'm getting at. And this is true not just for selling options, it's true for investing in general. Fortify your portfolio. Fortify. You got to go ahead and make the sacrifice. Like my dad made the sacrifice of spending money on the generator in case the power went out. You got to go ahead and invest in those put options that protect your portfolio from the downside. People who did that with Silvergate Capital, not only did they survive the collapse of Silvergate, they probably made some money because the insurance kicked in, just like the generator kicked in my mother's house when the power went out. Okay, so always think that way when it comes to investing. Don't get so caught up in greed that you forget that this too can pass. Everything that you're going through shall pass. Right? The good shall pass, the bad shall pass. And you always want to think, okay, well, about all the what ifs. That's how you can protect yourself, but it requires you to be a proactive thinker. And I really believe, again, because investing is culture, wealth is culture, and our wealth is going down, which means our culture is actually going down with it. A lot of the culture, very, very little of our culture is built on proactive thinking. Like imagine if Vladimir Putin shot a nuclear warhead and hit San Francisco tomorrow, and suddenly the power grid's out and there's no places, there's the national emergency and everything kind of shuts down. Black people will be doomed. We'd be in big trouble. We wouldn't be able to really survive. We don't have our own anything. We don't have our own businesses, hospitals, none of that stuff, the way we would need to in order to survive. So you got to change your thinking, or at least don't think like everybody else. How about that? People who don't think that way, they tend to do well, especially when times get hard for everybody around them. So because my father was always the guy who took the extra step to be extra careful and extra prepared, as the whole neighborhood was completely dark, my parents' house was completely well lit because my father engaged in good risk management strategies. So I applaud that. Okay, and I want you to do the same. All right. I hope I didn't overtalk that. I hope that thinking was helpful to you. And I really talk this way because I really need you to understand that we can talk all day about the X's and O's of investing, but it's really about sort of the mindset and how you sort of view your financial opportunities, how you view wealth, how you view decision making. That is the ultimate decider, if you will, in terms of what your economic outcomes are going to be. All right. So we're going to be in Los Angeles, in case you don't know. Saturday, the Black Wealth Bootcamp is 2 days. I'm going to do a deep dive, an intense deep dive in my new book, The 10 Commandments of Black Economic Power. And if you can't make it, you can get a copy of the book if you go to boycewatkins.com or Amazon. It's also at Amazon. And also at boycewatkins.com, there's a couple of things. One, there's a list of AI stocks that I really like that you can feel free to pick up that list. And then two, we have financial workbooks for children that I believe they're discounted now. So if you want to teach wealth to your kids, we develop really good financial workbooks for children. And then also there is a really great training on how to make money without working. So feel free to grab all those resources. Our goal is to be the one-stop shop in anything related to Black wealth. And that's all we think about is Black people in the Black Business School. And I want to see you succeed. All right. So take care, guys. Have a good day. God bless you. And thanks for listening. I'll see you